All right, let's talk about Ethereum Classic for a minute. Let's talk about some levels, talk about where we're at, where we're going, and what's worth trading right now. As of today, when we drop down into this line, we found support in 2368, 2350, 2375, depending on where you're trading it. Remember that all exchanges and all charts will not 100% match up. And, these are basic ideas depending on where you're trading and what you're using. We use trading view charts to chart these things. So if you're on trading view, then these should match pretty similar. But then also when you're on trading view, remember it depends on where you're pulling your information from. So this is a Binance chart for Ethereum Classic, Ethereum ETC. So we are charting ticker symbol ETC, crypto ticker ETC, Ethereum Classic. So we dropped down into these levels today. We found support at the, let's just say we'll call it 2370 or something like that. From there, we started ranging in this range and found a top right here around 24, 25, you could call it. We had a few wicks that have pushed up, one in the beginning and one recently, up to about 25.50, and this one was 25.45. So technically, you could say with wicks involved, we're making higher highs for sure. We went from a high of 25.45 to a high of 25.55 with the wick. As far as candle bodies go, we are also beginning to make higher highs. We're slowly pushing up into this line, and we just recently broke the trend line. Sadly, we did not come back, test it, and keep support on top of it, but we did drop down and then not push as low. And we're starting to build. If this works out right here, it looks like it's trying to build a base to move up right at the $24 mark, which was the higher part of this. So if you cut this range into two sections, this is what you got. And it's looking like we might try to push up here. And we've got a lot less selling pressure not having the regular markets open and the Nasdaq and the S&P, going down and dragging everything with it. When you look up here at this 25 level, even if we break through this and you start feeling like you're getting a moonshot, I would personally start aggressively taking your profits if you're, range trading, day trading this by this 25 mark. If you're looking for short and just nice and easy and safe moves, you're buying down here on these dips, trying to catch these wicks and being part of what buys this back into the zone, and then enjoying these push-ups and being careful with the fact that you're most likely pushing back down. It does look like Bitcoin might try to run a bit tonight. And a lot of times, what we see is the American economy goes to bed. Like, I'm trading from the west coast of United States. I'm in California. As we go to bed and the Asian markets wake up, a lot of times they'll run things up. And then you wake up in the morning and you'll see a huge move that you missed. And then I often see a huge sell off between like 4 and 6 a.m. Central Standard Time, or if you're on the West Coast, Los Angeles time, stuff like that. But if you're looking at it from an East Coast point of view, then obviously they're 3 hours ahead of us. So what I would be looking for anybody trying to just range trade this right now is pay attention to these zones that you're in. If you were to start to fall and lose this support, you might be able to get support in this box where you were originally dropping wicks. But if not, you can see that earlier this morning when we sold off, we wicked all the way down to $23. If we lose this range and we drop below this 23.70 range, you do have support just another 75 cents down at $23. If you and this is all low time frame, this is all for people trading right now. I try to get people the most up-to-date charts. A lot of people, they just edit out their videos, make a couple cool videos a day, put in some great thumbnails, make everything look really cool. And believe me, I enjoy that. I love watching good videos with lots of good content from other influencers and creators in the crypto community. However, to do all that, it puts a huge delay on the information when you get it. And for me to try to put something out that you're going to, try to immediately see, like while you're trading, and then, take some advice, or if it's in the middle of the day and you see the video pop up while you're at work, so that you can actually, go with, whatever I'm showing you, or, apply whatever the current narrative or the current trend is, rather than see the video a few hours or, a day or two later after it's been polished and made perfect. It's a lot harder to, really apply that unless you're looking at it from an extended point of view, or you say, okay, well, this is what it's doing, this week or last week, and I don't care, I'm buying for, next month or next year or something like that. For people trading, I'm trying to get videos out really fast. I've not been doing much editing. Even if I end up making myself look stupid or saying something that's a mistake, I just clear it up and move on. Try to push the video out immediately, and get it to you so that you can see it. I've had a few videos go out where I've called some things that are about to happen on, low time frames. I've had guys make moves, send me a DM and say, hey, that worked out well for me in the last, 15 or 45 or hour and a half. So you're not going to be able to get those results or give people that type of help if you're, polishing videos, sending them out to your people to fix, or, working with someone on Fiverr, or even if you can do all the editing yourself, the time it takes to put in a cool thumbnail, worry about how dumb your picture looks on the thumbnail, things of that nature, then you're not going to get that immediate content. It's not to say that if I don't, continue to do this for longer, I won't also want to make some really cool videos and look like a cool influencer. But for right now, I'm really just trying to pump out information to help people as fast as possible and give them the most current and up-to-date news. So if they see something pop up and they're subscribed, you can literally apply it to whatever you're trying to do. So that's kind of, what we're shooting for right here. So that being said, here's your low time frame moves. We are, we've come back, we've tested. Looks like we are trying to create this $24 base right now, and maybe try to push up, turn around, do the same thing up here, another 25 cents up, and maybe start moving up. As I said prior, though, I would really, start to watch this overhead resistance, because you've got a few, contacts here that were made as the bears were pushing it down. Those will come into play. It's not going to be just as if it's, not there and doesn't matter. So I would definitely pay attention to where you set your stop losses and your take profits. And, if you're shooting to trade this in this range, then this is what I would do on the short term. If you're looking farther out, you're buying right now for, a play in a few months, or you're just dollar cost averaging, then these are the levels you can look for to dip into and say, oh, I can get a better price here. And if it pushes down here, I can get a better price here. And you're not worried about the immediate move up. Then as far as, the overall trend, to give people a bigger picture on what's, going on in the bigger trend, we'll go to a higher time frame, and we'll start looking at this on the 4 hour and the daily real quick. And you'll see that you've got some levels in here that we've made contact with, throughout the past. This is, taking you all the way back to last year, and it'll show you during the first sell-off in 2021, and just kind of give you some ideas of where your levels are at. I went through here and cleaned this up earlier, marked it out, and I'll let's go to a weekly, and then I'll try to show you some of your levels in here. So what I'm seeing here, stretch this out, is you've got a level at 24, like I said, on the immediate. You drop down into these 23s. These are all immediate. And when you start worrying about if you lose that, then you've got to start looking left, and you've got to start looking at the bigger picture. Where did we actually have, points of contact and resistance in the past? And you start to find some of these, wicks played with these lines in between here. See, you had a wick in this area, wick in this area, wick in this area, wick here. And then this one dropped down here. Some people might say you should have grabbed this level in between. These wicks don't matter. That's up for you to decide. I gave you this whole box as a different level from 19 to 21 to pay attention to. And, if you were to lose that, and you were to look at what happened when we sold off and got the June lows. The June lows came in and basically created a box in the like 1350. If you count this wick, you drop to 1250. So you've got this, box here. You can call it, 12 to 16, 13 to 16, something in that range. If you lose these major supports up here, you drop down here. If we were to ever somehow lose this, and before I say that, let's look, back a little further. You can see that you had contacts here, or at least in the general range of. So gives you a good idea that if things were to get really crazy and you're wondering how far will you drop before you get some sort of bounce that you could at least try to, get aggressive, dollar cost average down into with heavier leverage if that's the way you trade, and try to get a pop out to reduce your position. These would be the levels I would look for. I would look for, the 16 and 13 to grab, rather than in your mind thinking, oh man, it's going to zero, or it's going to, $3, $5, because you don't have a plan. It's always good to have a plan going in with trading so that you know where these levels are at and you know what to expect. If you don't pay attention to any history and you're just trading, on the daily or the weekly, and you're on these lower time frames and you don't have any history to crypto, a lot of people are, new to the scene, and you come in and you start trading these things, you can be really shocked by how fast they move with the markets and how fast you can get wrecked, especially if playing with leverage. If you were up here trading this last night in this range, thinking that you're, up here in this, or go back a couple days even, this last week prior, you were trading in this range where it seemed like your worst bottoms were 25, 26, and you were trading up to almost $30, and then you fast forward to coming into current, and you see how fast we sold off. I mean, it's just boom, and then almost no chance to get out, and then boom, almost no chance to even figure out how you were just now trying to adapt to this. Then you come over here a little while later, this is a matter of a few hours, and you drop all the way down to here. This all happened really fast. I mean, this is the moves made from last night into this morning. And, a lot of people got wrecked. A lot of people that were up last night trading ranges got just completely annihilated when these things started selling off so fast. So definitely try to pay attention to your ranges. Try to have, a reasonable reality on what you're expecting, and, a realistic outlook on how high you can go, how far you can fall, things of that nature. It's always good to not just pay attention to candle wicks so you can see where it's been testing levels, and if it's up or down. Could be the bulls trying to push really high and see what they get, the bears trying to push really low, see where the money steps in. And you'll find that if you start to test any area too many times, then eventually usually somebody wins and they break through. So with this area right here, as far as today goes, for like the last 12 hours or so, we're really in this range where it's a very even fight. If you were scoring this as a battle, these scorecards are really tight between the bears and the bulls. You've got a real medium range here between this 23, 24 that they're trying to fight to get to 25 or to get below the 23. You've got wicks going in both directions, and up until recently, it didn't seem like you were getting much progress from the bulls. As of right now, this doesn't look good with this body pushing down lower. You'd really want to see them start to keep this up top. See how we had candles back here, or a little above this one, but you want to start trying to find some sort of confluence to work with, and then create your expectations on where you're going. As of right now, I'm hoping, for anybody that's bullish, to try to stay on top of this 24, use these 23.98, 23.85, things like that to load up your momentum and try to push higher for anybody who's day trading this. Other than that, I'll try to keep an eye on these things. If markets make, any big moves on any of these tonight and I get a chance, I'll try to get you some updates on your videos. But as of right now, that's your basics on Ethereum Classic. You are currently ranging between about 23.55 and 24.25. I mean, if you want to count this wick, then 24.50. So you can see here your real range is very small. I mean, you're really trading from 23.75 to 24.25. You are in, a 50-cent range here. People get chopped up. This is not trading that's meant for most people. This is, for most people, if you've got a longer outlook, maybe it's a good time for an entry position or to begin dollar cost averaging something that's, really upside down and in the red. If you've got, a much higher dollar cost average and you don't plan on cutting it loose, there's no reason why you shouldn't be dollar cost averaging that position down if you don't plan on getting rid of it. All right, you guys, have a good one.